Crisis in Toyland. Washington's latest trade spat with Beijing. The Asian flu in banking moves west. And Chinese markets defy gravity. The announcement today by the U.S. Consumer Product Safety Commission, CPSC, that it compelled giant toy maker Mattel to recall millions of Chinese-made toys, including famous American brands such as the Barbie doll, led to new heights of hysteria in American media, with a flood of attention-grabbing headlines and TV reports on the new Chinese boogeyman literally hiding under the beds of America's children. Washington politicians were quick to defend American youth. Democratic Senator Dick Durbin of Illinois, who is running for re-election and receives the bulk of his PAC money from labor, has demanded that the Chinese toy invasion be stopped at the border. This despite the fact that no one has been injured or harmed by any of the toys recalled, according to Consumer Product Safety Commission Chairman Nancy Nord herself. Ms. Nord said the recall was intentionally large to get as many of the affected toys off the shelves and fulfill the nanny state's duty to protect future citizens from parents who've not taught their children that ingesting toys is a bad idea. Today's action and earlier moves by the U.S. Food and Drug Administration, the FDA, reveal that Washington is taking its trade spat with Beijing to a new and different level. Imports of Chinese goods are expected to be up $3.5 billion to $63.5 billion for the second quarter. That puts 2007 on pace for another record U.S. trade deficit with China. Stymied by its inability to control China trade relations, Washington appears now to be using the policies and regulations of the FDA, the Consumer Product Safety Commission, and other government entities as weapons in trade disputes. But who's really at blame here? Is China to blame? The toys were made in China, yes, but Mattel's factories and workers in China were built and are paid by U.S. dollars. Direct foreign investment from Mattel and other companies. By building factories and relocating jobs to China, multinational corporations such as Mattel get increased profit margins, and by contracting out production and other services, they get to skirt regulations in the USA. Who's responsible for quality control? 10 years ago, in 1997, Mattel added what it calls global manufacturing principles to its corporate responsibility policy. The company created a highly successful and imitated council to monitor its lofty global principles, which include statements on safety and hazardous materials. Only 2 weeks ago, Mattel's investor relations celebrated the 10th anniversary of this program. In the wake of the toy recall, it is apparent that Mattel's global manufacturing principles and program are an utter failure. And what about inspection? One area rarely mentioned in the media frenzy on Chinese toys is the fact that only a small percentage of shipping containers entering the United States are inspected, ranging from 1 to maybe 6% at some West Coast ports. And that's X-ray scanning. Hand inspections are practically non-existent. Chinese stocks are on a steady climb since the last episode, reaching a new record high almost every day. The Shanghai Composite Index closed August 14 at 4,872.785, already hundreds of points above last week. The CSI 300 closed up again today at 4,795. The Shenzhen Composite closed down slightly since the week began, but is still in record territory at 1,331.216. Shanghai B-shares are still an exception, with some small gains over the past week, and closed August 14 at 323.168. The Shanghai B index is still one of the best performing classes of stocks in the world right now, up over 130% in both yuan and US dollar terms since the start of the year. Buoyed by the Chinese bull market, a string of big Chinese brokerages is planning IPOs mostly on Shanghai's domestic market. Gold State Securities of Shanghai is planning a $4 to $5 billion US dollar IPO on China's domestic exchanges early next year. Merchants, Everbright, and Orient Securities are names rumored to be planning IPOs. The stocks of financials, such as brokerages, are doing very well. The price of CITIC Securities, a company discussed in an earlier episode, is up over 500% so far this year. Qingdao Port Group, which operates China's largest crude oil import terminal, plans an IPO for later this year to raise funds to expand its port capacity. The company also handles iron ore imports, which are surging to feed the demand of China's ever-growing steel industry. The IPO may raise over $500 million US dollars on domestic exchanges. Shenzhen Airlines is discussing an IPO that may raise up to $1 billion, it's US dollars, probably on the Shenzhen Stock Exchange sometime next year. No other details at this time. Speculation continues to swirl about the massive cash infusions from world central banks. Was a collapse of the so-called developed world's banking system averted by the European Central Bank and the United States Federal Reserve last week? Both institutions poured billions of dollars into their banking systems. Even today, the ECB, European Central Bank, injected another 7.7 billion euros, around 10 billion US dollars. Canada has also added cash. The reason, most observers say, is to restore confidence in the aftermath of big losses in America's mortgage and bond markets. Over half, a record amount, of the U.S. corporate bond market is now considered speculative, the new euphemism for what were once called junk bonds. But the reaction outside the Atlantic Alliance has been more muted. The Bank of Japan added around $5 billion, but it is a move it makes on a regular basis, having done so about 20 times previously. Australia similarly added only a small amount of cash, and the rest of Asia has an abundance of liquidity. China, as we reported in last week's episode, is capitalizing some of its last remaining state-controlled banks, but that is a process removed from the credit problems of overseas markets. Indeed, it appears that 10 years after the Asian flu financial meltdown, that Asian banks may have healthier assets than banks in the West. I'll see you next time!